Welcome to the Weekly Spark. This week, we're going to cover jobs report. Is it real? Are the numbers real? And then we're going to take those jobs report numbers and show you on the charts how that affects mortgage interest rates. And then we're going to roll into a strategy for you as a real estate agent to grow your business to be the business you want it to be.
Welcome to the Weekly Spark, your fast 5-minute flash of insight into the world of mortgage and real estate. Every week, we're here to ignite your understanding of the market, from mortgage rates and housing trends to legislative updates and insider strategies. So let's strike the match and spark your week. This is the Weekly Spark.
What's up, everybody? I'm back. You got to look at Jason for a few weeks by himself, but I am back and ready to rock. Jason, you ready to go?
Let's do it.
All right, man. Tell us a little bit about this amazing jobs report that we got today.
All right, guys. So listen, what we thought was this great bond rally after the ADP numbers came out. What happens? The BLS jobs report comes out and they say that we created 130,000 jobs. So sounds good. But remember, they also revised November and December reports down by 17,000. And this is kind of a trick they've done per usual. So Ryan, I think these numbers are suspect, man. It goes against the actual payroll company numbers. And guys, I'm going to break this down, but understand, I'm going to explain why this matters. But the ADP report only showed 22,000 jobs were created, and Revelio showed negative 13,000 jobs were created. And we look at the BLS job numbers revisions from all of 2025, and this is why it matters for real estate professionals. For the full year, okay, the BLS jobs reported 403,000 job creations. They revised it down to 181,000 jobs. So what this means is that they are saying on average, we only saw 15,000 jobs created per month nationwide. Ryan, I don't know about you. That does not sound like a very strong, sound job creating economy.
Yeah, it's a continuation of the same, like you said. I mean, in 2024, they revised it to somewhere in the range of 880,000, right? So now we've seen back-to-back years where we've taken away over 1 million of these upfront reported jobs that have been created. It just feels hokey. It feels like there's some control of the Fed happening in the background because they go off of these headline numbers, not the revisions. And it seems like we're trying to hold rates up for a continued period of time for whatever reason, midterms. But either way, we're coming into this crazy time frame where people are just revising and throwing out numbers that don't matter. And the rules are made up and the points don't matter. So it's like, whose line is it anyway out here? All right. So what impact does that have on the rate sheets? I know we had some initial reaction this morning. I'm going to take it to the chart so that you can kind of break down where we're at today. And going to pass that over to you.
Yeah, so here's why it matters, guys, because the jobs report directly affects what is happening in the bond market. So if you look at where we are today, so we were down as much as 22 basis points today. Now, I think smart money realized that those job numbers will probably be revised like they do on every other report. But we're down 6 now. And here's why it matters, guys. So if you see these lines of resistance will directly affect 30-year rate mortgages over time. Moving average. And it does act like a support and resistance line. So as you can see, once we break through, see how we've kind of vacillated back and forth. And we did see this wonderful pop-up where we thought, hey, rates are finally getting in the right direction. We get a tweet, we get Iran, we get Ukraine, we get anything that goes on the political. What we're looking at today, guys. We saw this jump down underneath the 25 moving average. It held on this 50-day and it's bounced back up over this 25-day moving average. Our hope is that it can hold this line, because if we can, we'll see a nice jump up to this next Fibonacci level, and we'll see a nice continued adjustment and reduced interest rates. So real estate agents, very important to at least know the basics. If the job market is weak, we should see better rates. If inflation gets worse, then they are not going to cut rates either. So those are the two things that you want to be informed when talking to clients.
Yeah, I think it's extremely important for agents to know and understand that part of it, at least, so that they can stay on that forefront when they get asked that question, because experts in real estate need to be experts in real estate. Which leads us right into our last point here. So Jason, I'm going to take this one. This is a quote from a book called Atomic Habits by James Clear. It was a great read. I highly recommend you read it. One of the quotes was, "To write a great book, you have to become the book." And I think as real estate professionals, we kind of take that for granted a little bit, that experience will teach us anything we need to know. And ultimately, it really comes down to whatever business you want, you have to decide what type of person runs that business and become that person. And so there's a little metaphor in here for that. If this is something that you haven't thought of before or have thought of and are kind of struggling with, it's something Jason and I have explored together pretty often. We actually talk about it about once a week. Like, what person do we have to become this week to accomplish what we need to do? Happy to review that with you and kind of walk you through our process for developing that. So feel free, reach out, schedule a call with us. We'll make sure that we're crushing that thing so you can have the business that you want. Awesome, guys. Appreciate you jumping on with us this week. That's all we've got. Have a great week, and we'll see you next one.
That's a wrap for this week's edition of the Weekly Spark, brought to you by Creative First Mortgage. If you've got questions or want us to cover something next week, please let us know, shoot us a message, and until then, keep your deals moving and keep your week lit. See you next time.